we're very comfortable on a go-forward basis, regardless of where the gold market takes us. And I think we're also in that kind of sweet spot. Every major mining company at one day in the past was a small mining company, and they all grew. In the early days, that production was organic and very driven.
Welcome, everybody, to another episode of Inside the Markets Extra, presented by StockPulse.com. We are more than honored to be sitting down today with Doug Ramshaw, president of Minera Alamos. Thank you so much, Doug, for joining us today.
Thanks for having me on, Justin. It's a pleasure.
Our pleasure. What is the most recent update at Minera Alamos?
Yeah, so Minera is, well, we were a gold developer. We are actually now a bona fide gold producer, although development of new mines in our future is always in our blood. Most recent news over the last few months, we've been putting out monthly updates in regard to the ramp up of operations at our first gold mine at the Santana project in Sonora, Mexico. So excited that we started to produce gold, and we're probably now getting closer to making a commercial production decision sometime early part of 2022, and you know, getting to that point where I think any company developing assets wants to, which is a self-sustaining cash flow driven business, so that you're not constantly worrying about where the next dollar is coming from.
What's been the, I guess, theme of 2021, either at Minera Alamos or in the gold mining sector?
Yeah, I was giving a panel just yesterday where we're looking back on it. I know we all thought, you know, it was nice to leave 2020 in the rearview mirror, but really 2021, it's been a tougher year. You know, the theme has been kind of the opposite of what we saw in 2020, which was a bit of a perfect storm in that we'd come out of a 5-year, you know, bearish market in gold. Costs have been rationalized down to levels to work in a lower price gold environment, and then we saw record high gold prices. So you saw, you know, amongst the producers, major margin expansion, record free cash flow, and great performance. And in 2021, we've seen a modest decline in the gold price. It's we have very healthy gold price levels for well-run operations, but we are now starting to see the impact of inflation and, you know, a cost contraction, a margin contraction, and that's kind of impacted the equity performance in what should be a very positive environment for gold mining companies. So I think the focus, and one of our focuses at Minera, is cost control, capital expenditures at the lowest you know, end of the cost curve for building mines, just so you can rein in and try to maintain very healthy margins in a gold market which may or may not take off next year. I don't believe that building, you know, for me in my capacity, the last thing that I focus on is gold and the gold price. You know, we built this business model in a $1,250 gold environment to work in a $1,250 gold environment. Everything beyond that is gravy, and it certainly you know, so I don't think one should get fixated about the gold price so much, but instead just look to be very efficient at how you produce the gold.
Do you have any further comments on efficiency and being built to mine at $1,250 per ounce gold?
Yeah, I mean, you know, we're seeing it. There's been quite a bit in the news of late. I mean, not just going through the majors quarterly reporting season where the flavor of the day was cost inflation. We've seen developers with large capex projects that, you know, you add 25-30% to a $400 or $500 million project. It's very meaningful in terms of potential cash shortfalls. A banker said to me recently, the beauty of our business model is you know, your 3 mines in combined probably come in at a total capex of $70 million US. Now, whilst you don't want that number to go up, The reality is a 30% increase in 70 million US is 20 million bucks. 30% increase on a $500 million project is a much bigger ticket item. So, I think we're very defensive in terms of the current environment we're in. And I certainly, for gold bugs out there, if you really believe that, this is a healthy gold price, then, or that gold price is going to go higher, that I think it's gold producers where one should focus one's money on. We have an industry which has way too many companies, I think, focused on the front end of the Lassonde curve, and very few that actually make the trip to the far end of it, which, to me is really important for, getting off that hamster wheel of constantly worrying about where the next money's coming from, and then having shareholders worrying about where the next money's coming from, because that money inevitably comes with dilution to them and their holdings. So we're very comfortable on a go forward basis, regardless of where the gold market takes us. And I think we're also in that kind of sweet spot. Every major mining company at one day in the past was a small mining company, and they all grew. In the early days, that production was organic and very driven. And nowadays, those big companies, they can't meaningfully increase their production profile on a year-by-year basis. And so you see a lot of these mergers and acquisitions to scale up to get increasing production profiles. But for a junior producer that can grow into that, there's a really exciting prospect of being a 40, 50,000 ounce a year producer next year, 100,000 a year after, moving to 150, 200,000 ounces, in 2024, 2025. When you have that kind of organic growth, you're going to perform well, even in a declining gold environment. So again, I think that speaks to our defensiveness in that regard.
What do you expect from 2022?
Well, 2022, we're going to continue the ramp up of our Santana gold mine. That at some point early part of 2022 will announce commercial production when we're good and ready. And when we can send the message to the market that it is, on a consistent basis, generating net cash at the operations level. And thereafter, our business model was always building a sequence of mines. So our second operation, called Cerro de Oro in northern Zacatecas, we're anticipating submitting our permits for that in the early part of next year as well. Mexico, where we're focused, has a very good permitting environment. We would expect to get permits back on that project by the end of next year. And that project could be up and running by the middle of 2023. So I think next year we're going to get a two-track approach to both Santana going into commercial operations, coupled with showing that there's another mine that's going to get built right behind it, which speaks to that kind of stacking of production profiles that will make us quite a growth story, I think.
And then how about from the greater gold market in 2022? What do you anticipate? You mentioned inflation.
Well, if gold doesn't react to inflation, then basically all the things that 20 years ago it would react to, it's finally said, no, we're not going to react positively to any of those now. It's a new world. The inflationary outlook is not transitory in my mind, at least not in the short term, as the Fed has been trying to suggest. It's not just supply chain issues. That's obviously an element of it, but it's the huge money printing. It's one thing to say, oh, it's the supply chain issues. But what about all the money we printed as a result of COVID and pandemic relief? So, I believe the foundations are in place for a very healthy gold market in 2022 and beyond. If it doesn't come, it's a missed profit, but it doesn't kill our business. There are some gold companies out there that to build their mine, they need $2,000 ounce gold, like we don't. But I'd love to see it, especially in the early days. The more gold can rise, the more free cash flow we have to reinvest in our business. That being said, I'm not in that school of thought that, you know, talk about $3,000 and $5,000 and $10,000 gold. I don't want to live in a world of $3,000, $5,000 or $10,000 gold, because it means we've got a whole host of other problems that we're facing as well. So I think the outlook, you know, is positive for gold, let's say. It's going to be hard for the gold market to ignore the inflationary pressures that are in the system right now. And, you know, that should serve gold miners very well, especially ones that have low capex builds like us, that have cost control in place, so that you're not just seeing rising gold prices, but rising costs at the operations level as well. So your margins are the same, which we want to get back into a period like 2020 of margin expansion again, rather than the contraction in margins that we've seen in 2021.
What do people need to know about the Santana gold mine?
We'll have a maiden resource out next year, early part of next year, likely just before the commercial production announcement. We built that gold mine, and our pre-pandemic budget was 10 million Canadian. The pandemic came along and our team still executed unbelievably well in Mexico. We have a Mexican-based team. And it cost us 10 million US to build a gold mine in the middle of a pandemic. And I take my hat off every day to our operating team that did that. A few years ago, when I said we were going to build a mine that cheaply, the number of raised eyebrows and eyeballs that were rolled, but we did it. And we actually have built a very good track record of doing what we said we we're going to do, which has built a lot of trust with our shareholders. So, you know, Santana will come out with this maiden resource. We are a company that has successfully bootstrap projects before, where we do not need to drill out the entire resource and then scale a mine around that global resource. Instead, we'll get a mine up and running, and then we'll grow the resource out of cash flow, which is a far better way for shareholders in terms of being anti-dilutive for them. And so any project that we look to build, so long as it's plus or minus kind of 400,000 or 500,000 ounces to start, we don't mind building a mine on that. We can do it cheaply, we can do it effectively. But what's key is we need to see the upside on the project geologically, so that if we build that 40,000, 50,000 ounce a year operation, can we use the cash flow from that mine, redeploy it into the exploration, expand the resources, and as we're expanding the resources, we'll expand the production profile. So all our projects meet those criteria. And a good example of that would be when our team built a mine 10 years ago under a different banner, under the Castle Gold banner. They started up a mine on a 300,000 ounce resource, and they built it in 2007, early part of 2008. It was a 300,000 resource, and they built a 25,000 ounce a year mine for 6.4 million US. Now that seems a very small little mine. But what they did was redeploy the cash flow from that operation into exploration. They knew that the resource was bigger. They grew the resource. The production profile went to 50,000 ounces, then was heading to 75,000 ounces when the company was bought out. And at that point, that 300,000 ounce resource in 2 years had grown to 1.2 million ounces. And the company that bought it out ultimately took the production up to 120,000 ounces. So whilst all our projects start in that kind of 40,000, 50,000 ounce a year range, we look at all of them as having the potential to grow into 100,000 ounce a year operations, because that's how you build a production profile. You do not want to be slamming together a whole bunch of small operations. You're going to run into bandwidth issues, and it's just not appealing to the market. But you string together a bunch of 50, 60,000 ounce a year operations that all can grow. That gives us our longer term potential targets of growing to kind of that 250,000 ounce range, which is far more meaningful when it's done from just a small number of operations.
We've had the honor of sitting down today with Doug Ramshaw, the president of Minera Alamos. Thank you so much, Doug, for joining us today.
Thanks, Justin. Appreciate it.
And thank you everyone for watching StockPulse.com's Inside the Markets Extra.